Hello guys, welcome back to another solid hot video, guys. We'll just have to keep it very quick and summarized for you guys today. So in today's video, we're gonna talk about in a very summarized and very well explained way how I actually trade. Okay, we're gonna break down from A to Z how I take my trades and actually what I look onto the chart and what I'm actually expecting to see on the chart before I take any trade. Okay, so I'm just gonna explain to you guys what the blue setups do back end and actually make some good money out of the market. Okay, so it's gonna be very brief and as well very well explained to you guys. So we're gonna jump right into it. So what I always do is, okay, I actually trade this pairs. I will show you guys. So these are the pairs which I actually trade. I actually included the crude oil just of recent. But the way I trade, you can actually apply it onto any pair. Okay, you can apply on any pair. You can use it exact same way, and it actually works very fine. Okay, so I'm gonna walk you guys through how I trade. So generally, I always want to analyze the market. Okay, I want to actually check and figure out where I am in the market. Okay, so that actually means what trend is actually in the market. Is it trend of that market actually a bullish one? Is it a bearish one, or is it just moving sideways? Okay, so I've gotten some tools within which actually that helps me to figure out on which direction I gonna trade with. Okay, so doing that, I always want to start with the higher time frame. Okay, as if you have been following me for a while, you will know anything from me from the daily and above is actually a very solid time frame for me. So, okay, from the daily to let's say a weekly or monthly or whatever, that is a very solid time frame from which I want to gauge or actually try to monitor where the market is moving into. Okay, so for example, let's say we are on a daily and we actually see the market doing something of this sort. Okay, it actually does something like this, and then let's say we are somewhere around this market, somewhere around this area in the market. So me as a blue setup, the way I do trade is, okay, I want to analyze. Okay, I want to start from left to right. Okay, you always want to start from the left moving towards the right. Okay, you want to see what is the history or what is the market telling you from that standpoint. You won't want just to focus at this current market price based on some lower time frames. No, I always move from higher time frame daily to from daily to anything higher. It's a very solid time frame for me to check or gauge from which direction the market is actually moving into. Okay, so let's say, for instance, this is a certain market condition. Let's say the market is in daily. This is a daily, right? You want to start from the left to the right. Okay, so what we can actually see is that the market has been moving towards the downside right up to this level that it actually break towards the upper side. Okay, so what we could see is that what we could realize is that this market, instead for it to continue its move towards the downside, after this break, it actually got this break towards the upper side. Okay, and it gave us that confirmation that it wants to go higher. Okay, so for me, this is what I'm actually looking into in the market on those higher time frames. So if, for example, it's a daily or weekly, I want to see double breaks into a certain direction, right? Let's say even if the market was right here, let's say the market was starting from here, let's say we had this first break and second break, then this is very fine for me to actually start looking for those sales towards the downside, right? So in this scenario, what happened was that we had those double breaks towards the opposite direction. So we had the first break and the second break, which it's a very clear signal that the market wants to go bullish, right? So this is for us already a roadmap that we want to see in our head, and we say, okay, for example, this pair XYZ, for example, is a bullish pair. So whatsoever thing we want to do, we want to keep it on our mind or stock into our mind that yes, we are following the trend towards the upper side. Okay, and for example, maybe targeting this high or maybe targeting this other high. So those will be our target. And what we want to do is we want to jump on other lower time frames, be it 4 hour, 1 hour, and whatsoever, based on some other certain concepts which shall talk onwards in this video, and actually want to catch those buys towards these highs, right? Targeting this one, this high right here, targeting this other high, and whatever high, and just want to watch the market go into that high. Okay, So that is a very first step. Okay, market structure is very important in whatsoever trading style or trading system which you've gotten out there. If you just twist around with market structure, it will be very beneficial to you guys. Okay, so this is a summarized way in which I always like go on each pair every day and actually wanna see where is that direction, right? So let's say for example, you might be wondering, let's say for example, the market was somewhere around here, right? Let's say the market was somewhere around here. See, you must not always trade, right? For you, as a trader, it actually means you have gotten a certain capital, okay, under your control. And the very first, very first principle is for you to protect that capital. The principle is not to make money, right? It's for you to protect that capital. Without the capital, you cannot make money, okay? So the very first principle is to protect that capital, okay? So if the market conditions are not yet aligned onto your favor, it actually means two things. The very first thing is you can actually sit onto your hands and do nothing. Or the second thing which you can actually do is actually move on to the next pair and try to figure out if you can trade that pair, right? So let's say, for example, the market was right here. So based on the way we trade, right, it actually means that we want to see double breaks on higher time frame into a particular direction for us to follow, right? So let's say we had that break right here. Okay, the market didn't follow up, and we had another break right here. The market didn't follow up, right? So there were two things which we were actually expecting the market. We're expecting the market to actually break again towards the high to give us that confirmation that it wants to go higher, or for the market to continue it breaks towards this low to confirm to us that it is still going bearish, right? So it means that what? Just pause for a second, I'll explain to you what it means. Let's say, for instance, we had that break towards this downside. Instead for the market to break towards the high side, right? It instead went towards this high side, right? So now you might be wondering that, oh, the market broke past this high, okay? And it didn't give us that second break, but it actually came back towards the low and gave us this break. Yes, so it actually means after this break, then it means you have to go on lower time frames and then try to figure out how we can get into trade to take the trades towards the downside, because the market has been bearish, right? It hasn't given us that reversal towards the upper side. Okay, so this break towards the upper side doesn't mean the market has changed its face. Okay, so now this is just some sort of an explanatory it is a confirming like I am using this explanation to confirm to you guys why I'm using double breaks. Okay, so one break towards a certain direction does not mean the market has changed its face, right? It might just be that the market is actually trying to absorb some certain maybe some certain liquidity or whatsoever stuff based on some other principles or concepts which I personally explain with my mentees in my mentorship, right? So it's some sort of absorption happening right there. Okay, let's say this break happened towards the upper side. We had that absorption before the market continued it trades towards the bearish market which it had already given us on the bigger picture, right? So in this scenario, let's say it actually broke towards the high side. It actually means you had the first break. It actually means you had that first break that happened here. Okay, that first break that happened here, and the second break that happened right here. Okay, so after this break, then we want to go on lower time frames, try to figure out how the market is reacting right here before we can take that trade towards the upper side. Okay, so that is the very first part explained for you guys. Market structure, trying to find out double breaks towards a certain direction. Okay, so now if you can actually go onto the chart and I'll explain to you guys what I mean by double breaks to a certain direction. Okay, so we are actually on the crude oil daily. Yeah, nicely. Let's start with the weekly, for example. Let's go with the weekly, right? So remember what I told you guys, starting from the left to the right. This does not mean once you're on the higher time frame, you will just want to try to see what the market is doing right here. No, you might get it randomly, but in order for you to understand what is the context, what is that song the market is singing, what is the market actually saying or telling you to do, then you want to start on the left side of the market before going to the right side. Okay, from left to the right. So you want to read the markets from that point of view. Okay, So let's say this was our weekly, right, on the crude oil. Okay, so what we can actually do is that, right, let's say we haven't traded this pair for a very long time, or we haven't ever traded this pair, so you want to start on the higher time frame to see what the market is saying. So crude oil started its trading points right there. So let's say the market was right there, right? It moved towards the higher side. It gave us this low. Okay, this low was being put in place, but the market actually went traded below that low. Okay, so even if the market was still right here, of course you will say that the market is bearish, so you want to take trades in here going towards the lower side, right? But still you want to see your double break. You want to see that double break before you want to continue the trade, right? So you want to see this break happening before you continue the trade toward the lower side. But in this scenario, what happened was that what the market, rather, it went above that high. It gave us a very first break and it gave us another second break, right? Now again, you might be wondering what I consider as a break. Okay, a break for me is just a body candle based on a certain very fine retracement. If, for example, this, see, I will not consider something like this as a valid retracement. Okay, I will not consider something like this as a valid retracement. Something like this, I will not consider something like this as a valid retracement. But I would rather want to see something very visible, like candles trading towards the opposite direction before it moving. Okay, and again, if you have been watching my previous videos, you will actually come to realize that what any candle that trades and actually trades below the previous candle with body full, then that is for me a valid retracement, right? Okay, so this was a valid retracement. So I could actually say this was our first break and our second break in the opposite direction. So just seeing this from here to here, right? So from here to here, I would have purely confirmed that the crude oil is very, very bullish, right? So what happened nicely in the market, we had those continuous breaks towards the same directions, which was giving us that bullish momentum. So that break happened right there. This was a very last break towards the opposite side, towards the upper side. We had this break right here, right? The market traded very nicely towards the upper side. And again, so what actually happens is that will now bring us to the next step, which is demand and supply. Okay, so we want to trade off some certain zones, which I call S&Ds. Okay, so once you've actually put in place all this market structure based on your higher time frame, okay, and you've actually come to realize that one, yes, we are now bullish, the market structure is bullish. So from where we want to trade, we want to trade off demand and supply zones. Okay, so once you've spotted that, it means that you want to trade off demand and supply zones. Okay, so I will go deeper again little. So we had found that what after this break happened, then what we actually see is that we want to put this as our target. What means by target is that what it means, you want to see the market retrace at a certain point and then come and take out this high. Okay, me personally, of course, this is what I'm expecting for crude oil to happen. I want to see it move nicely and take out this high, right? Because we are very, very bullish. So once it is bullish, on our left side, we want to see those highs being taken. All these highs should be the highs within which we want to see as target. So this is a very last target which we want to see the crude oil taken out from the market. Okay, so that brings us to what I call demand and supply. Okay, so once we have actually spotted that those breaks, for example, then we want to go below those last retracement. Okay, see, me personally, this is a very full valid demand, right? Based on the way I trade with my mentees, this is a very valid block. Okay, it's actually a blue block. This is what I would call a blue block, a refined blue block, which you could actually get it much more refined for a very, very, very valid demand and supply zone, which if you could go on 1 hour, for example, let's go step by step, right? Let's go on our daily. Let's go back to our daily. Okay, so we got our demand zone right there, right? So we got our demand zone right there. So this high, from this high to this low, anything within this range, right, is our valid demand zone. Okay, now if you have informed me as well on my Telegram, on my public Telegram channel, you will get to realize that what I call demand zones are for me just lines of interest, right? I just want to see the market come to react at the very last certain peak or the very last certain value in price, before moving. I call them lines of interest. Okay, so this is our daily, right? So for instance, someone would have been seeing this market flow from this high to this low as a bearish market, right? Based on the daily. But based on the market context, based on what the market is actually saying, the market is very, very bullish. Okay, because all these breaks in here, towards the lower side are just minor breaks. This is what I would call minor breaks. Okay, see, this is just some sort of reaccumulation happening in the market. The market is just undergoing some sort of reaccumulation, breaking towards the upper side before that final break towards the higher side happens. Okay, so what is happening in here? These are just some sort of reaccumulations happening in the market, which I explained that concept of reaccumulation very deeply in my mentorship. My mentees should actually know more about this. Okay, so now, as I mentioned earlier, demand and supply, this is not how I trade it. See, I will explain to you guys. This is not what I mean by demand and supply. This is not what I mean by demand and supply. This is not what I'm, sorry, I will explain to you guys. Just hold on a second. This is not what I mean by demand and supply. This is not what I mean by demand and supply. Okay, it does not mean the market should come into this demand and move very fast, or come and tap into this demand and move. This is not what I mean by trading of demand and supply. If you are still in that way of trading, then you always lose trade most often. This is not what I mean by demand and supply. What I actually mean is that what after this breaks happens, okay, me as a bliss I will always want to do what? I always want to monitor the price as price is actually approaching this demand right here, okay. I want to see again those double breaks on lower time frame happening right here, okay. I want to see double breaks happening in here before I could take a trade towards the upper side, or this same scenario happening at that demand or supply right there, or it happening just after some sort of absorption. Okay, so once this has happened, okay, I want to go on my lower time frame to monitor if I can find a confirm before my S&D zone or my supply and demand zone, or if I'm searching at that demand and supply zone, or again after that demand and supply zone. So these are the three areas in which I want to look for my confirms. Okay, I don't just trade randomly once the market come into that demand or move. Okay, so this is actually a very key explanation for you guys. Whatsoever way which you are trading, right? So this is just some sort of a friendly advice to you guys. You must have gotten some certain confirms which you actually want to see before you're trading a certain market, right? If you are trading demand and supply, use those same confirms of yours to actually monitor the price. If price is coming, it's already approaching your demand zone, or if it's already at your demand zone or after your demand zone. Do not lose hope once the market is traded past your demand zone or still coming towards your demand zone, right? So these three areas are very key areas within which, if you apply those same confirms which you are looking for in these demand zones, if you apply them here or here or here or any of these three, then you see an exponential growth in your results. Okay, so it happening in here is just because of one key reason, because of this high right here. This high right here, it actually means we had a certain block in here, which I will call a blue block. Okay, so it actually means we had a certain blue block in there, which means as the market is coming, it will actually react off it. Okay, it will come and react off it. Sorry, let me make it a little bit bigger so you guys can understand clearer. So it actually means the market can come and react off at the opening of this blue block, and then it move. Okay, remember, waiting for price to come right below here is not always the best scenario, because price has no meaning to come in here. It has no sense to come in here because the momentum is already bullish. So it will just want to see some valid reasons, maybe some sort of double breaks towards the upper side before it goes. Okay, and if the market comes past below this low, then it might just happen because of some sort of absorptions that it want to absorb in here before continuing in move. Okay, so you should keep that in mind. So going back onto this concept which I was explaining earlier, so we have already gotten our momentum or our overall direction, which is bullish. So I was explaining right there I'll get rid of this. Loading nasty. I'll get rid of this. Okay, so all these breaks which you guys could be seeing in here are just minor breaks, right? Are just minus break. So what actually happened on the daily, which I actually shared with my mentees, and as well I shared in my public Telegram channel. The link is just right below. If you follow that link, you actually see what I was seeing in the market. So the market actually had given us those breaks, right? It gave us the very first break. You could consider this as the very first break, but I consider this to be the very first break, okay? And I had this second break right here. So this was the very first break one, very first break two, right? So remember, this is just some sort of a confirmation when the market has already come into that demand zone. Remember, we had our demand zone in here, right? From this high to this low, right? And we only had those double breaks from here to here, confirming that the market is for true, very, very ripe for us to continue the bullish move after this bearish movement, right? So it will make more sense for you when the market has already broken that high. Okay, it will make more sense for you once the market is coming bearish. You shouldn't take trades. Of course, yes, these are very valid supply zones which you could actually trade off towards the lower side. But if you keep on doing this, right, you will always get cut off from the other direction. So you always not get the market direction in the correct manner. You might even get yourselves confused at some certain point. Okay, always be patient. So at a certain scenarios, you have to be very, very patient as a trader, right? So I had that break one here, I had that break two right here. Okay, so for me, what actually meant is that what I will not want to be very, very stupid to wait for some supply or demand zone in here. No, I would not want to do that, right? Because of course many people would have been waiting for that last bearish candle before the up move, right? Let's get rid of this. Let's get rid of this. Okay, so this is what many people would have been doing, right? So after they have seen this break one and break two, they will actually come right below here and say, okay, this is our unmitigated area or fresh imbalance or whatsoever thing, or let's say there is imbalance here, right? And they are waiting for price, and they're waiting for price to come in here, to come tap into this demand zone before moving. But look at what happened, right? Look at what happened. I will play the chart and you see what happened. Look at what happened. Price never came into it, right? Price never came into into that demand zone. Price never came into it for a very, very valid reason, which is very, very valid, which means the market is already in that momentum move. There is already a momentum move, which means market does not really even need to come lower before moving, right? So once I saw this on my daily, I actually went lower to the 1 hour, right? I went to the 1 hour. What I was seeing was very, very amazing. Again, I had this demand zone right here. Okay, I had this demand zone right here. Once I saw that, I was actually expecting price to come tap into it based on, again, this imbalance in right here. But remember, market will never always respect, like market does not react to certain supply zone because of imbalance. No, that is not always the case, right? See, if you actually see what is happening right here, it actually means based on higher time frame, this zone is already mitigated, right? This is a blue block right there. See, if you see from this high, sorry, from this high of the blue block to these candles in here, the market has already mitigated this zone. So it makes no sense for it to come again lower before moving, right? So what happened is that, what, again, you want to always check as price is approaching your demand zone. You always want to check if price is already giving us that confirms before that demand, or at that demand, or just below that demand, right? So the market traded for a longer time. So what I could actually see is that what the market was actually trading sideways, right? It was trading sideways. So I did nothing. So I was still expecting my confirms. So what I did, I went lower on the lower time frames. On the 30 minutes, I could see something very interesting. So again, not only these double breaks I saw right there, I didn't only see these double breaks which I saw earlier on on our day, right? These breaks and this break that happened right there. But again, I saw these breaks that happened on the 30 minutes. We had this break one, right? The market was trading highs and lows, highs and lows, highs and lows. We had this break one, and we had this break two. Okay. Again, watch very closely, guys. Watch very closely. If you were trading this high and this low, what you could have actually realized is that what you would have wanted to do something like this. You would have wanted to do something like this, from this high to this low to be your demand. Okay. But again, I will explain again much more better. See, this is a, guys, please pay much attention to this. See, this is imbalance in right here, right? This zone to this low high, this is imbalance, right? So many traders will always want to wait for that reaction into this line of interest or into this demand before they want to take the trade. But remember, as a blue setup, always and always wait for your confirms before your zone, at your zone, or after your zone. In this scenario, look at what happened. The market came very nicely and reacted before that zone based on the confirms within which I trade, right? There is clear imbalance right there, okay? But remember again, the market had already moved towards the higher side because of that momentum move. And again, we had a blue block from this high to this low, okay? And the market had already reacted to that blue block from that high to its low, okay? See? Look at it very nicely. This high and this low, the market has already mitigated it. And based on momentum move, it makes no sense to come and fill this imbalance. Okay. I actually shared this with my mentees. No, on the public, on the, yeah, as well. I will show you guys what I mean by that. I shared this with my public trading channel, right? So this is my Telegram. So I shared this setup on the, I will show you guys. Yeah, it was right here, right? If you go on the link, just follow the link below, you will see it very clearly, and just toggle around it, you will see what I mean. We shared this setup right there, okay? So I was still expecting a lower demand, but the market reacted off some certain confirmations before that zone, and it left very nicely, and we actually moved very nicely. This was the trade I took, I shared, and I was already break even right there, and I closed my trade somewhere around here, okay? So that is how the market played very nicely, and TP was fully met, okay? So going back to the chart, right? So if I could actually confirm more of this trade, if I go on the lower time frame, let's say 5 minutes, I will get rid of this. Yeah, I'll get rid of this. Okay, 1 second, guys. Great. Okay, perfect. I will show you what I was expecting to see in the market, how I actually confirmed that trade, right? So it's very simple, guys. If you keep it very simple, if you keep your trading system very simple, you will get to understand what I mean by this. So this is what I was expecting, right? I was expecting price to come at this low before it actually takes off, but what happened was it gave me a certain it gave me double confirms in right there. So I had what I call the run entry. This run entry actually means that what the run entry is actually means if, for example, you have let's say you have your demand zone, okay, and then you want to see price come to react at a certain demand, right? So you are expecting price to do some certain moves into it. So as price is actually breaking a certain move towards the higher side, let's say I had a trend line from here to here, and the market is reacting like this, coming towards the high side. So as the price is crossing this line, right? See, I'll explain to you. So I had this line right here, this trend line. So as price is crossing this line, and the candle that crossed this line, the very first candle that crossed this line and closes, exactly at that point I would take my entry, okay, and I would want to see the price go higher, and my stop loss would just be below that candle that broke past this trend line. As you can clearly see, I had my entry based on the break of that trend line from this candle right there, this candle, okay. My first entry was somewhere around here, okay, and then my stop loss was somewhere below that very candle. and then I wanted to see it move very higher. Again, I had another confirmed entry. It's a little bit fractalized based on the 5 minutes. I can see it right there. But to explain for you guys, I actually saw it on the 3 minutes. I saw the second confirmed entry on the 3 minutes, right? I'll explain to you guys. Get rid of this, get rid of this, get rid of this, get rid of this, get rid of this. Okay, so this is what I was seeing, right? So the market was doing these highs, this lows, blah blah blah. It was doing all this nice stuff, right? Okay, so I was expecting another double entry. So I saw this first break and I saw this second break. Okay, this is break one, this is break two. So what does that mean? There are several ways within which you can get involved in this trade right there. I will, for the sake of my mentees, not to give more on the public, I will give you a little bit of insight what I actually saw right there. Okay, break one, break two. So you could have entered this market just after this break, right? You wanna spot your demand. You would have spotted another demand right there. You would have spotted a demand right there from this bearish candle to the low right there. So what does that mean? It actually means as price is trading above this demand, this break two, okay, then this is our demand right here. You want to see price come back into this demand and then it move. So that is even where I saw my second entry. But there was another way within which you can get involved without waiting for this retracement to come back into. So I will keep that for my private mentorship. So I shared this this trading setup as well on the trading on my Telegram, which I showed you earlier, and the result is right there. So actually this video I'm really getting a little bit longer on this. So I hope you guys actually understood what I meant by trading my way. Okay, this is what I always see, or how I always want to see the markets react before I get involved into the market. Even if you want to go on different pairs, like for example the GBP USD, that's this pair which I traded. Okay, I traded this pair. That was I have been trading this pair for a very long time actually. So I saw this breaks, right? So this, see, let's try to analyze this again as the crude oil, right? So starting from this left side right here, okay, the market has been very, very bullish, right? So we had breaks from here, we had breaks. So we had these breaks, we had these breaks, we had these breaks, we had these breaks, we had these breaks. Once the market came in right here, right, you actually were still expecting the market to move into these highs. So what we actually still expecting was this highs to be taken, all right? So based on that momentum move, which we realized was a very bullish or buy side of the market. So the market reacted off that demand which you're expecting for the market to move higher, but it actually failed, right? So again, what happened was it gave us another double break. We had break one and break two, 1, 2. So this is only meant by one reason, that one confirmation that what the market has actually changed its phase from a bullish side to a bearish side based on, again, those double breaks towards a certain direction, right? So what I will now be doing on the GBP USD, I want to see the market moving lower into some certain lows, like these lows. Okay, when I see these lows, all these lows been taken. Okay, all these lows should be taken out. This is what I'm actually expecting for this pair to be happening in the market, right? This is what I'm actually expecting. So that goes same for the crude oil. Okay, so now you see how it actually makes it very, very simpler for you once you understand this way I trade. So based on those higher time frame, you want to gauge into the future in which certain direction you want to trade into, not just trading into bearish or lower or bullish or whatever direction randomly. No, in my mind now, I know every morning or every time I go onto this pair, I know it is bullish. I want to look for reasons for the market to take me into the bullish direction. Simple, rather than trying to start from the beginning to say, oh, maybe the market is bearish, maybe the market is bullish. No, now in my mind already, I know it is very, very bullish, right? Targeting all these highs right here. This is the very target I'm targeting right there. This is my overall target, right? So if I now see the market reacting to some certain highs right here, and then I say, no, I want to go short, then it means I'm going off topic. It actually means I'm not respecting my trading system, I'm not respecting my trading plan, and I actually don't know what I'm doing, right? So when I look for reasons for the market to take me higher, right? So now I am not doing nothing. I'm not doing anything right here. I'm not doing anything right here. So because based on those double breaks, I haven't found any confirm. Okay. Yes, we have gotten confirms. High, high. But again, we want to see some certain tap or some certain reasons for the market to maybe give us, like let's say for example you had this at a certain demand. Let's say it's our demand right here, and the pair is trading right here, right? If the market comes lower and do again 1, 2, right? So then again you want to see that trade from here towards the higher side. So simple. That is very that is a very basic way within which I trade, right? So this is like an iceberg, like a tip, like the icing on the cake. That is what I just explained to you guys. I have a lot of various other concepts within which I add onto this same type of reasoning that gives me an in-depth understanding of the market. Okay, so I just wanted to share with you guys an idea, so you guys could as well have an idea, an idea on how I do trade. Okay, so I hope you guys understood very well. And as well, if you have gotten any questions, any concerns, or any topic which you want me personally to explain much more further on to the next videos, please kindly do not hesitate to put onto the comment sections. And yeah, so that's it. See you guys on to the next one. Have a great trading week, and bye bye.